Okay, let's unpack this. Imagine achieving your highest ever revenue and profits in a quarter that's typically your weakest. That's exactly what one of India's leading digital marketplace ecosystems has just done.
Yeah, it's really a fascinating case study. It shows how, strategic focus, operational leverage, and really understanding your market, this huge evolving market, can lead to remarkable results. Almost counterintuitive, really.
Absolutely. So today we're doing a deep dive into the Q1 FY26 financial results of Cartrade Tech Ltd. We've pulled together insights from their earnings call, their investor presentation, the press releases, basically everything we could get our hands on.
Right, to bring you the important bits.
Exactly. The nuggets that really tell the story behind the numbers.
And our mission here is to go beyond just the headlines. We want to help you understand the key drivers behind this, maybe some surprising facts, and what these numbers truly mean. Not just for Cartrade Tech, but maybe for the wider digital marketplace scene in India, too.
Think of it as your shortcut to understanding a pretty complex success story. So let's get right into the big picture for Cartrade Tech in Q1 FY26. And honestly, it's an eye-opener. They delivered their highest ever profit after tax, PAT, hit 47 crores.
Which is just
Yeah. And to put that in perspective, that's an incredible 106% year-on-year growth.
106%. That's huge.
And it wasn't just profit. Revenue also soared to its highest ever, 199 crores. That's a solid 27% increase compared to the same quarter last year.
And what's truly remarkable here, and the company really emphasized this point, this record-breaking performance happened in Q1. Now, they've always considered Q1 their weakest quarter for revenue,
Yeah.
seasonality, things like that.
Right.
So to see these kinds of numbers suggests something more fundamental is shifting. Real momentum in the business, not just a normal cyclical high point.
That's a critical insight. Yeah. It suggests they're not just riding market waves, but like actively shaping their own path. And if you look at their balance sheet, it backs that up. They're sitting on a rock-solid financial position.
Completely debt-free.
Debt-free with a healthy cash balance. 824 crores. And that's up by about 70 crores just from the last quarter, which is significant cash generation.
Definitely. And this financial strength, it provides a really powerful foundation for their market dominance. Cartrade Tech isn't just, a player. They've really cemented their position as number one.
In multiple areas.
Exactly. Number one automotive platform, number one used classifieds platform, and the number one vehicle auction platform in India. That's like a triple crown.
That scale is immense. And what I found particularly striking looking through the numbers is the sheer volume of organic user traffic.
Ah, yes.
Each of their main platforms, Carwell, Bikewell, and now OLX India, they're each serving over 150 million annual unique visitors.
Huge numbers.
Across all platforms, it was about 75 million average monthly unique visitors
Yeah.
in Q1. But here's the kicker.
The organic part.
Yeah, 95% of this traffic is organic, which just indicates incredible brand strength, great content. They're not just buying users with expensive ads. Plus, they still have that physical presence, over 500 locations across India.
And that organic growth is key.
Right.
It translates directly to their profitability. You look at their consolidated EBITDA.
Right, the earnings before interest, taxes, depreciation, and amortization,
Yeah.
basically operational profit.
Yeah, that measure. It saw a huge 98% year-on-year growth. And maybe even more importantly, their margins expanded dramatically
To 25%.
to 25%, up from 15% a year ago. That's a big jump. And meanwhile, total expenses only went up by 8%.
Even with increments.
Exactly. Even with employee costs, including annual increments in Q1, which they expect to remain stable now for the rest of the year, it just showcases really powerful operating leverage. Revenues are growing way, way faster than costs.
Okay, so with those impressive overall numbers as the backdrop, let's maybe peel back the layers a bit. Where did this growth really come from? Let's dig into the different business segments, starting with the consumer group. That's Carwile and Bikewell.
Right. So this segment was a major driver. Revenue up 32% year-on-year.
Pretty strong.
And P8, profit after tax, grew by 79%. Also achieved a really impressive 29% EBITDA margin, which for this industry is kind of benchmark performance.
Okay, and what's fascinating there, I think you mentioned, is the context of the wider auto industry.
Exactly. This strong growth happened even though the overall Indian auto industry was, well, relatively flat, maybe even slightly down in Q1.
So they're definitely taking share.
It strongly suggests that, yeah. Cartrade Tech seems to be gaining significant market share and grabbing a larger slice of the advertising and marketing pie from manufacturers and dealers who need to reach buyers online.
That makes sense. And their business model there helps too, right? Mostly fixed costs.
Precisely. It's characterized by a largely fixed cost base, low variable incentives. It means once they cover those fixed costs, the big chunk of any extra revenue drops straight to the profit line.
Very efficient.
Extremely efficient.
Okay, what about the remarketing business? This is Shram Automall and Cartrade Exchange.
This segment had truly exceptional results. Revenue growth was 36% year-on-year.
Solid.
But the PAT growth, an astounding 258% year-on-year.
Wow, okay. 258%, what drove that?
Well, margins also expanded significantly, from 14% up to 23%. The growth itself came from a mix of two things. One, there was a slight bounce back in vehicle repossessions in India, which directly feeds their auction business.
Right, more supply.
And two, continued growth in their retail businesses. Both contributed pretty evenly, roughly 45% each to the total volume. They're now running at an annualized rate of 1.4 million vehicle listings going up for auction. That's huge scale.
And management seemed to suggest that the groundwork they laid earlier is paying off now.
They did. They highlighted that the hard work done in the segment during previous periods, when repossessions were lower, is really bearing fruit now. Patient investment leading to pretty explosive results.
Okay, good to see. And then the third piece, OLX India.
Yes, OLX India. Post-acquisition, it really maintained its momentum, showed a 71% year-on-year surge in profits.
Which clearly suggests that the operating leverage and those integration synergies they've been working on, they're delivering.
Absolutely paying serious dividends.
And drilling down a bit into OLX India specifically, what really caught my eye was their intense focus on product and tech.
For the last 19 months, they said.
Yeah. It's not just keeping the lights on. They recently launched an elite buyer program. Sounds interesting. For cars, bikes, electronics, other used stuff.
Trying to elevate that experience.
Seems like it. And they've got plans for 3 more product launches by, end of September or early October?
That's the plan. And management did report seeing, quote, early signs of growth in revenue, traffic, other user metrics for OLX. They sounded pretty confident about reasonable growth in the coming quarters.
Well, you can see why.
Yeah, especially when you consider OLX India stands out with, get this, 100% organic traffic.
100%.
And 180 million yearly unique visitors, all achieved without spending on advertising.
That's just incredible brand recall. Dominant market position right there.
It really underlines it. And what's also notable, even with all this new product development and general salary increments, employee costs for OLX India were actually down 5% year-on-year.
Down 5%. How?
Efficient management, leveraging existing talent effectively. It really speaks volumes.
Okay, so let's maybe zoom out a bit. Look at the strategic picture, the future outlook. Management views the total addressable market, the TAM, for the whole group now, especially with OLX in the mix, as, well, their words were almost limitless.
Yeah, that's quite a statement.
It's not just new and used cars and bikes. It's auctions, electronics, real estate, furniture. Basically, the entire secondary market seems to be in their sights.
And this feeds into an important point they made. The company firmly believes its main growth driver, and maybe its only real limitation, is its own execution capabilities.
Not like competition.
Not competition, according to them. They see platforms like OLX and Automall as having no direct competitor because others often operate differently. More asset-heavy models, or they might even be customers of Cartrade Tech's platforms.
That's a strong statement about their unique position. I mean, while they might not have a direct like-for-like competitor, what about indirect competition? Or, new players popping up, especially with a market they call limitless. Are there risks they might not be seeing?
That's a fair question. I mean, their argument really hinges on their model asset-light, platform-based being fundamentally different and, crucially, more scalable than, say, a traditional dealership chain.
Right.
Plus, they have that first-mover advantage in digital, building up that huge organic traffic over years. But yeah, the risk, it could lie in a really well-funded, super agile competitor suddenly emerging with a truly disruptive tech approach.
Or maybe a big horizontal player deciding to pivot hard into their verticals.
Possibly. For now, though, their focus seems laser-sharp on internal execution, which suggests they feel they have a pretty significant head start in moat.
Understood. And speaking of tech, you mentioned product development. They're putting significant investment into AI and tech across the board, right? Front end, back end.
Absolutely. Across all platforms. The goal is enhancing customer experience, improving operational efficiency, making smarter data-driven decisions. You see it in things like AI-enabled search, verified users they're rolling out, money-back guarantees, integrated financing and delivery options for buyers.
And for sellers.
Things like smart listings, certified products, better analytics, they're really building out a more sophisticated, integrated ecosystem.
Okay. And with that big cash pile, that 124 crores, what's the plan for that? Capital allocation.
Yeah, they mentioned their strategy there. Primarily, it seems focused on potential mergers and acquisitions, M&A, looking for targets that offer synergies or could accelerate their growth.
So buying growth or capabilities?
Seems like it. Distribution to shareholders is also, on the table as a consideration, but M&A feels like the priority right now. They're actively looking.
Okay. And if we connect this all back to the broader picture for you, the listener, the Indian automotive industry itself is still seen as pretty underpenetrated compared to global markets. And digital advertising adoption in India, hovering around 15–16%, is way behind developed countries, often at 30–40%.
Which means there's just this substantial long-term runway for Cartrade Tech's continued sort of secular growth as digital adoption inevitably keeps climbing.
It's a structural tailwind.
Exactly. And don't forget the impact of just basic internet penetration increasing, especially 4G and now 5G rolling out into India's Tier 2 and Tier 3 cities. That's crucial for driving growth across all their platforms, tapping into whole new user bases, getting high-speed access for the first time.
Right, another demographic tailwind there.
Yeah.
So wrapping this up, what does this all mean for us watching this space? Cartrade Tech isn't just showing growth. It's demonstrating really robust profitability and clear market leadership in a very dynamic digital landscape.
They're focused on organic users, diversifying the segments they're in, and investing in tech like AI. It seems to be a really potent combination that they're executing well on.
It really highlights the potential for these platform-led businesses, particularly in emerging markets like India, especially when, like you said, they can leverage a large, engaged, organic customer base to drive not just revenue, but also margin expansion, even when the wider industry might be facing challenges.
Yeah, it's almost a testament to building these deeply integrated, efficient operations from the ground up.
So for you, the listener, it's really about seeing how a company can achieve these kinds of outstanding results by really understanding its unique market position, investing strategically in the right places like product and AI, and just leveraging efficiency. It feels like a bit of a blueprint for growth in this rapidly digitizing economy.
It does, and maybe it leaves us with a question to ponder, right? Given Cartrade Tech's incredibly strong organic traffic, especially for OLX, and this ambitious AI-led product roadmap they have, what might be the next potential game changer? What product or feature could truly unlock the full potential of that vast, limitless used products market in India? Maybe even pushing well beyond just vehicles. What could that look like?